Hey, Gary's Gulch, welcome back. So today might be a little bit shorter, yet it is a topic that comes up over and over again in my practice with my clients and helping them create their legacy and grow their wealth over time. And the topic is trust. So here's a question for you. Can you answer what a trust is, what it does for you, when you should have one? Can you answer those questions? I'm betting, unless you're the top 1% or actually already have one, when I say top 1%, I mean about financial knowledge and having gone down all these rabbit holes, very likely you can't answer that question. I think you could even be like the top 1% of people in my industry that are working with clients for legacy and trust themselves and still couldn't answer it. I think you could be the top 1% of CFPs, certified financial professionals, and not be able to answer this question. So it is confusing. And everything blends across these lines. Let me help you out with this. So trusts. First, you have to bring down this family of multiple different kinds of trusts, right? So just very quickly, I could name probably 20 different kinds of trusts. Revocable trusts, irrevocable trusts, joint trusts, bypass trusts, special needs trusts, land trusts, asset protection trusts, spendthrift, life insurance trusts, qualified personal residence trusts. There are all kinds of these things. You want to keep going? Grantor defective trusts, charitable remainder trusts, pet trusts, blind trusts. They just keep going on and on. And it really, the name is intended to explain the specific special use for this tool. Now, can you simplify it for us, Gary? Of course, that's the point of this podcast and this episode. So let's rewind this and let's go back to how do we understand, grasp what these things are, and do I need one or do I not need one? I would say there are three really big things that are important to know about what kind of trust to have, and does it even apply in your world? Okay, the first thing is distinguishing between revocable and irrevocable. The second thing is how are we impacted with taxes? And when I say taxes, I'm talking about two completely separate events or two separate systems. Okay, there's the system of annual income tax, and that's important for sure. Certainly the biggest expense in your life are annual income taxes over your lifetime. But then there's a completely separate thing that happens after your estate pays that last annual income tax for the year in which you passed away, and that is called estate taxes, or death taxes is what some people will call it. Now that number is really large right now, but we'll go over it. And then the third thing is dealing with making sure that your ideas of legacy, of how to deal with finances, how to be successful financially and maintain the agency in your own world, how have those been passed forward to those people that you wanted to learn the lessons? So the most important thing about have we added value in our world, do we have a sense of accomplishment, are we proud of what we've done in our lifetime? One of the things is that we are able to propagate that forward. Like, you have very little meaning in life if you have not positively affected somebody else's life beyond the grave, or beyond your time here on the planet, into the grave, I guess I should say. They always say that the success of an individual's life can be judged by the length of the burial ceremony, how many people are in that line behind the hearse on its way to the gravesite. If there is incredible amounts of people, they dedicate days after you in remembrance of you, you become a legend. Think about Charlie Kirk. Think about Martin Luther King. Think about President Washington, right? We just had Columbus Day. If we dedicate large amounts of things because you have impacted people's lives for years to come after you pass. All right, now let's reel it back and let's talk about those three different topics. Okay, first, revocable and irrevocable. What does that mean? All right, so you have heard things like a revocable living trust or a family living trust. This is the one that 99% of people who actually need a trust should have, right? This is something, it's called revocable because you can change it during your lifetime. Its purpose is not asset protection at all. In fact, most trusts are not asset protection. That's another common misconception. There's a thing called a land trust. That's a version of a revocable trust, which means that you own it during your lifetime, and people think that it's asset protection. The reason they think that is because its true purpose is anonymity. It is to allow you to own real estate and make it difficult, not impossible. Nothing's impossible if you have enough money and time and resources. Make it difficult for somebody to understand who actually owns it. And yeah, that is a version of asset protection. If somebody wants to harm Gary Pinkerton and they decide that they're going to go destroy some real property that I own, then they first have to know what I own. So that is a form, but in my opinion, it is not a very successful form. Again, it just takes some really good research and some time, and people can find out what assets people own. Donald Trump doesn't take that approach, and he's been a very successful billionaire. Right? How do you know he doesn't take that approach? Because everything he owns got Trump written on it, right? Like, it's not hard to figure out what they own, right? But yet you will find people who are operating on a much smaller level, and they own a property, but when you go look at who the owner is, it is sniffsmellswellllc.com. You can't tie it at all to this person. And some people think that's important, but most importantly, I think the attorneys out there convince people that is important and it's successful and it's always going to work. And yeah, if the asset that somebody's trying to take, or your total net worth, or how much you've actually angered somebody is at the normal American average middle class level, yeah, it's probably adequate. But I think you should not fall victim to somebody who wants to sell you this big expensive trust, and instead remember what the jobs are. So a revocable living trust enables you to avoid probate when you pass away. And secondly, it allows you to memorialize what you want to happen and your ideals about things like personal finance and how to operate correctly, and allows you to teach people from the grave and control their actions, if you will, spending habits for sure, from the grave if you happen to die before you've actually taught them everything in person. So I have two sons. They're 22 and 24, and apparently the human brain doesn't actually mature in males until you're like 26, 28 years old. And listen, these are great young men, but they do not have everything financially figured out quite yet. And so I have a living trust. And the point is that the beneficiaries of the living trust are my two sons. Now, living trusts aren't actually outside of your control. That's intentional. And so you can change things. And because you can change things, that means that it's not outside your estate. So it's not protected from you. All right? We'll talk about something that's irrevocable, which is different than this. Okay? So a revocable trust is in your estate. So its job is not to protect your assets from you or to provide this big, strong asset protection. Its job is to allow you to get through probate and get your estate to get through probate and everything keep operating immediately after or in the short term after you pass away. So it's got this very short-term Band-Aid approach to things to allow everything to keep going. And then the second thing is that it provides a vehicle for you to memorialize what you wanted to happen financially. And I would say that anybody who has young children, has people who are still depending on them inside their world, under their roof, so to speak, then you need a revocable living trust. And they can be done very inexpensively. We help people do this through a company called wealth.com that we are practitioners of. Paul on my team helps people do this all the time, and I help people do it. It is very inexpensive, and we can get it down to the very personalized, detailed level. In fact, we love and enjoy doing this. We use AI to help us so that we can keep the costs down. But anybody out there who does not have a revocable living trust, and you have children or you have things that you want to move on to your grandchildren, and you want to do it at a reduced cost, revocable living trust is that thing. How does it help you avoid probate? Here's what happens in every state in America after somebody passes away. All right? They pass away and hopefully they have a will, because the will says, this is what I want to happen. I want my next door neighbor to have everything I own, let's say, all right? And they're your best friend, and you want them to have everything you own, and there's no children, or even if there are children, you can say that in a will, right? And what happens is the will has to go before a judge. And in most states, that could take 3 to 9 months. Florida is epically bad about the backlog of how long it takes to go through probate. Right? So probate costs something. You got to get an attorney, or the state will provide an attorney, and the process just costs to complete. Right? You'd like to avoid that process. But a will has to go through there and has to have a legal professional do this. And the reason that this process has to happen is because there might be somebody out there contesting the will. Maybe I owed a bunch of money to a contractor, and I want all the money to go to my neighbor, And the contractor's, hold on a minute, his estate has not paid me yet, right? And that's a legal process to protect the contractor. And so the judge needs to make sure that happens. And so this day in court happens months later, and maybe the contractor's in the court, and the judge says, does anybody contest this? And he raises his hand and says, yes, here's a lien I have on the guy's property. So it is a legal process that is important, and so the probate process needs to happen. However, and this doesn't necessarily take the contractor out of the process, but if you have a living trust, you can take the home and you can have the living trust be the owner of it, right? And you can take your bank accounts and you can have the living trust be the owner. You can take your businesses and have the living trust be the owner. How does that help? What happens at death is that the living trust didn't die. It lives on beyond us. It becomes us for a period of time. And so there's this process where we go through the whole thing of adjudicating the estate, like we've talked about. And during that period of time, you've named a trustee. It might be your parents, it might be your siblings, it might be somebody like that. And they can take a copy of the trust that says that they're the trustee, and they can, a death certificate saying that you're passed away, and so now the trustee matters. And they can go and immediately get control of whatever the trust owns. So it might be your bank account, it might be your business, it might be your personal residence. And so those important big ticket items that you don't want to fall apart. If your business needs to make payroll and you don't have a living trust in place, it might be difficult to do that, right? And the whole thing might fall apart. Your real estate needs some expenses covered or the mortgage paid, and no one's around to be able to do that until the judge gets through the probate process. That's not going to go well. What happens if you have people who are depending on you and you need to pay for school and food and groceries, and grandma just wants to be able to actually take them to the doctor and make decisions on their behalf when they're under the age 18? All that can happen with a living trust, and it's not going to happen very well without a living trust. And if you don't have a will, so definitely you want to have a will, but a will and living trust package, again, we help clients put those in place all the time. It's very easy and inexpensive. And so please reach out to me if you don't have one and you're listening to this and you want a very good solution that is very thoughtful and puts in place what you want to happen even after you pass away. So if you decided that the kids were going to go to college, that you were going to help pay for their first business or their first house or their first rental property, and that they were going to get the money at age 25 and then some of it then, and then all the rest of it at age 30, and maybe you help pay for the wedding and all this stuff that you wanted to have happen, that can still happen by virtue of a living trust and the words that are in that document to ensure that your ideals and financial guidance live on beyond you. And while you're in the grave, the whole control it from the grave idea. All right. And so if you have young children, if you have assets that you want to make sure go to the right place, then get a living trust, because they can continue on immediately after your death, and your trustee can make sure the wheels don't fall off the bus while we're waiting on the judge to go through that will and everything else. Now, there's going to be stuff like the wedding ring and maybe the wedding ring, or maybe something that you got recently. You just purchased a new car and you didn't have time to get that owned by the trust. Okay, so there's things that living trust is not going to own, and that's why you still want all this other aspect of the will and living trust package, right? So there's going to be like living medical powers of attorney and financial powers of attorney in case you become incapacitated but not yet dead. And so this gets a little more complex, but my team will walk you through it and simplify it for you. And so just reach out again. But once the judge gets, the big day happens, and you've paid for everything, and the will is read, and it's not contested, now everything pours into the living trust, and we're off and running. But another thing that happens there, once you've paid that last tax return and that calendar year is completed, and the process of reading the will and getting through all that, once that's all done, probate process is behind you, then the living trust becomes irrevocable. So it's been revocable at this point, so you can change it, you can add your cars, you can change the home, you can change the guidance to the kids. It becomes irrevocable. And now your guidance lives on until there's no more assets in that trust. It could live on for a very long time. Technically, you could have a Rockefeller kind of legacy trust built out of this thing where it's still around for 100 years or so, assuming the documents said that could happen and your state supports it. But I think at this point, all 50 states allow that kind of thing to happen. Most people don't do that because a living trust doesn't normally have the level of thought process and just due diligence put inside it that a irrevocable legacy generational wealth trust does. And so this kind of dynasty Rockefeller trust thing, that's the irrevocable side. So we're shifting from something that was created revocable to help you control assets in the short term after passing, to take care of the kids, to avoid that expensive probate process as much as possible, and to memorialize your ideas, right? So I've gone over this a few times, but that's what revocable is. A land trust that you buy to be covert about who owns this stuff, that's revocable, because you can buy and sell the land in there and all that kind of stuff still, right? So those are examples of revocable trusts, all right? And most people just need that. There's a small, maybe 1% or 5% of people that have the trusts maybe, need this irrevocable thing from the beginning. What's the point of irrevocable? The point of irrevocable is to create that border wall that Trump's putting up between us and Mexico, is to create this impenetrable thing that separates everything that's inside that trust from you. It is you giving away assets during your lifetime. Irrevocable means you can't change what happens there. That's a little scary. Okay, in practice, it's true you can't change it, otherwise you just make it revocable again. You tear down the wall and bring it back into your estate. All right, so who needs an irrevocable trust while they're alive? Some people do specialized ones. A life insurance trust is an example of an irrevocable one that is quite popular. It's becoming less so nowadays, but it is popular. And it has a specific purpose. Take a life insurance policy on your life that could cause some estate tax or death tax problems and move it over there. Okay, let's reel back America here to, I don't know, let's say 20 years ago. And let's say that the estate tax limit was $1 million. Maybe in your state you had even more limiting stuff, or maybe it was $5 million. But it was a small number compared to what they are today. Today, a couple can combine things and do nearly $25 million, and it goes up every year. So if you have less than $25 million as a couple in your personal estate of everything that you own, you don't need to worry about having an irrevocable trust today. Now, last year, it was questionable about whether we needed to worry about that or not, because it was about to be brought down to somewhere in the $10 to $11 million range had the big beautiful bill not passed, right? So that law passed, and it kicked out the can out through, I think it was 2029, supposedly made it permanent, but the next Congress could come in and say, no, we're not doing that anymore. So permanent really doesn't mean much in Congress, but I digress, all right? So now we're on the irrevocable trust. Irrevocable trusts are important for people who have more than, let's say, $20 million today. And it's also important if you want to protect things from you. Land trusts don't protect things from you. Revocable living trusts do not protect things from you. That's not the purpose. Irrevocable trust says, I am intentionally, purposely giving this away, and I can't go turn that around and bring it back. And as I said, that sounds scary, but in practice, it's true you can't manipulate and deal with the things that are in that trust directly, but there's two really important things you can do. One, you can fire the trustees, right? So you set up the trustee initially, and if the trustee's not doing what you want, they're like, yeah, I understand what you said you wanted to do, but I've changed the rules, and I'm going to now go buy myself a boat, and I'm not going to pay any attention to your trust. So that's not good. You can fire the person and put in place somebody else who will pay attention, right? So there are things you can still do. And the other thing you can do, and this gets a little more detailed, but this is what I've personally done, is that you can manage the LLC that's owned by the trust, right? So I can't tell the trust what to do, but I can say, hey, I'm manager of this big old LLC of a bunch of real estate or something that I've moved into this irrevocable trust. I no longer own it. I gave it away, but I can still buy and sell real estate inside there because there's an LLC in there, and I'm a manager of that LLC. I don't own very much, but I can still control things. All right, so I just wanted to paint this picture that there's revocable. You control everything. You can change anything you want as often as you want. Its job is to avoid probate and to keep the wheels on the bus shortly after you pass away, and it becomes irrevocable for a period of time. And most people say things like, hey, I give the kids at these different ages, but by the time they're around 30, they have everything. There's nothing in the trust anymore, and it goes away. It's possible to continue it much longer than that, but it's difficult to do that without just paying the expense and the level of effort that you would have done for irrevocable anyway. Most people keep those separate. All right. And then there's things like land trusts and that kind of stuff, and that's all revocable. You can do that, and it doesn't do a great job of asset protection. That is not why I would personally own it. Leave the asset protection to LLCs so that you can incorporate in a tool that was intended to go do that. Okay, there's another thing called a domestic asset protection trust. That's become quite popular recently. It's very successful in America. What they're trying to do is allow you to protect your assets domestically in a trust that's created here in America to do it similar to what they used to do, or what we still do with offshore trusts. You have a Nevis trust, you have a something Cayman Islands trust or something. And those trusts are far more expensive because you're dealing with other governments, and they are more protective. Because there are some countries that will absolutely not allow you to adjust the things that are in your trust if you are being sued or you're under a U.S. court case kind of thing, intentionally set up that way. So those are definitely asset protection, and they are not in the U.S. But domestically, you can do pretty close to the same kind of asset protection today, and it's only maybe 10 years that most states have been able to do this, and not every state in America does it yet. But there are some very strong ones, and I use these personally. Okay, and so where does the domestic asset protection lie? Actually, that thing can be in either one. It can be revocable or it can be irrevocable. That sounds confusing, Gary. I just said that trusts are not asset protection. The Domestic Asset Protection Trust, or the DAPT, that thing can start to approximate that. Again, it is more expensive and more difficult to do that in the living trust world. Just use LLCs for that. That's my recommendation. Talk to your attorney because they're actually licensed in that. All right, so that's a domestic asset protection thing. Like it can be in either one. All right. So now we're going to go back just briefly to this irrevocable, and then we'll close this thing up. So irrevocable trust, get it outside your estate. It certainly protects those assets from you. Hold on, Gary. You said that trusts are not asset protection. Okay. There's a domestic asset protection one who has a specific job for that. There's land trusts. They don't do a great job in my opinion because all they really do is try to hide who owns it. And then there's the irrevocable. Why does the irrevocable do a great job? Because you don't own it. Listen, if you're worried about somebody suing you and getting your second home, then yeah, you can call me up and you can gift it to me and we'll do all the paperwork, and now you don't own it and I own it. And guess what? When you get sued, they can't take it from you. You don't actually even own it. And that's the same thing that happens when you gift it or sell it to your irrevocable trust. It is now gone. It's not yours. And as long as you follow the rules about irrevocable trusts and don't pull it back into your world, then they cannot go take that just because they have sued you and taken your primary residence or whatever you have. All right. So that's an important distinction, is that you can do asset protection in the irrevocable trust world because it will get it out of your world. All right. And I mentioned that the most important thing of irrevocable trust, though, are the tax side of things. If you're getting up there into that $20 million world, then you need to start working with an attorney to get this stuff outside of your estate, because if it's in your estate after you pass away, then after the income tax side of things is all done, then they hit you with this estate tax. And that's 40% federally, 40% of what's left in that trust. So if you have $30 million and you're done with the income tax world, you still have $30 million, 25 of it can be protected today as a couple. But that other $5 million, we're going to take 40% of that and say thank you very much. So many people will move stuff outside the estate to do that. And then the second thing is that it is enduring. It will last sometimes for generations. Rockefellers have a trust that was created in the early 1900s, and it has no indication that it's going anywhere anytime soon. Generations have done that. And you really need to do that in an irrevocable format. Yes, revocable living family trust turns irrevocable, but in most cases it does not have the depth that is necessary for it to last for generations. All right, so revocable, irrevocable, the different kinds of things that can be inside there. And again, there's 20 of them easily, and we read off a bunch of them at the beginning. Last thing I want to talk about is another go-to again about the tax impact. So we talked about how irrevocable will protect from taxes. Revocable has nothing to do with changing your personal tax situation. But the irrevocable is really just protecting from the estate tax side. But now the question comes up, income taxes. Hopefully I haven't put you to sleep, but income taxes. You send things over to this irrevocable trust. You're giving away stuff for the benefit of your beneficiaries, and you want to maybe gift it. You can gift, for example, $17,000 a year, and the people who are receiving it don't have to pay tax on that. It's called the annual gift tax exclusion. Okay, so you're gifting. For each of my sons, for example, I'm going to gift, let's say, $17,000. Maybe my wife wants to do the same thing. So we can gift a substantial amount of money. If you have your grandkids in there, you can gift to them as well. So you can gift away a lot of money. Of course, you've already paid tax, or actually the question is, have you paid the tax? But the beneficiaries don't have to receive it or pay tax on earning or getting gifted the money. All right, so question is, what happens? Is the trust getting taxed or not? You know how trusts kind of act like people, right? And so the revocable living trust is just you in a trust format that will live on after you. The irrevocable trust, from a income tax perspective, is really very similar. So an irrevocable trust has the same tax breakdowns that we have. They have the 0% level, and then they have 10, 12, 22, 24, 35, 37. So they have the same brackets today that the human does. The difference is that they are very low thresholds. For a married couple to get into the 37% tax bracket, you are making hundreds of thousands of dollars after your deductions. So we're in the $300,000 to $500,000 range before you're in that 37% tax bracket. But the trust has already gotten to the 37% when you get to $15,000 of income. On an individual level, that's zero tax level. So trusts are penalized. If you're gifting money into this trust and you haven't yet paid taxes on it, that's a bad idea in most cases. So you want it to be what's called defective, which means that you can gift money to it, but it doesn't earn any taxes. It doesn't have to pay any taxes going forward because you already paid the taxes. Now, that's not always the most important thing, and we definitely want to talk with a trust attorney, but I talk with them all the time. I talk with my clients, and I've gone down a little bit for the graduates out there. I've gone down a little bit into the trust world, but you can see it's confusing, right? Like, I'm 30 minutes into this conversation with you almost, and we've gone down a couple rabbit holes. I want to now back up. I want to back up, take a deep breath, and let's just talk about what are these things so that you can have more basic takeaways. Those of you that are already at the graduate level, you're professionals in this world, you can hit the fast forward and go on to the next episode. By the way, the next episode, a little bit of a teaser, I'm having a conversation with my great friend, mentor, and my mortgage guy, Aaron Chapman. He's out of Arizona. He just wrote an incredible new book, but we're actually going to talk business topics on maybe some projections of what's coming for mortgages, what's coming for the real estate industry, and you ought to be paying attention to what's happened to gold out there. If you just say that gold is a reflection of devaluing of the US dollar, like even in a snapshot, now they don't go linearly like that with each other, but gold has gone up like 30% compared to the US dollar in the last several months, and that's an important thing to think about. And so, teaser, let's make sure you listen to that next one. All right. Deep breath, we're now just backing away. A trust is something that families can use and set up during their lifetime that can do a few different things. Big picture, you want to first break it into revocable or irrevocable. Revocable means during your lifetime, it is inside your estate. It's not asset protection. It's not tax strategy. It is simply allowing you to avoid probate, which is an expensive and delayed process when you and your spouse were to pass away, and it allows you to memorialize what you want to happen going forward. And it's super important if you have children still living inside your house, or even if you have an adult parent who is 100% dependent upon you, right? So that's revocable. Revocable helps you during your lifetime, and it sets forth what should happen in the short term after you pass away. The typical family living trust is gone within 20 years after the individuals pass away. Why? Because the children who were beneficiaries are out of the home and gone on their own. If you keep it around longer than that, you have to be careful that it's actually written with enough due diligence to handle future situations. Most of them dissolve. Then there's the irrevocable side. Irrevocable trusts are far less common, far more expensive, because there's a lot more attorney level due diligence that has been put in place with them. But the point of an irrevocable trust is to get things outside of your estate to protect those things from you. It's also set up as a Rockefeller trust or a dynasty trust, meaning that it has enough rigor in the language that it will still be relevant hundreds of years from now, potentially. And then the third thing is that it has a different tax situation. You can have assets grow inside this thing without it having to pay that really onerous trust tax threshold levels. It would be far more expensive to give something to one of these irrevocable trusts and let the trust pay the taxes at the time of the gift as well as ongoing into the future. It would be devastating to how much the assets could grow. So most people will pay the tax and then give the after-tax stuff to that irrevocable trust. I do hope that's helped. I hope I didn't put you to sleep while you're driving your car, but I can tell you that this is one of the biggest questions, misconceptions that people have out there. So if you feel like this is needed in your world, if you don't have a revocable living trust and it's clearly important, most people who are financially successful need a revocable living trust. I'll just say it simple like that. So I will say it slower in case you got me on 2x speed. Most people who are financially successful, which means they have things that they're saving for the future, and they have children, and they want their children to think and act a specific way financially, they need a revocable living trust. Don't freak out. It's simple to do. We help all of our clients. Just reach out to me at gary@garypinkerton.com or provide me some feedback in any other way that you know how. Thank you so much, and until next time, go make something amazing happen in Gary's Gulch.